I don't know what gives that away. Today was the day that we got the ever-important CPI number, and drum roll, please. It came in pretty much in line as expected, right? The core reading came in a tenth better than was expected, but now a lot of pundits will see the move higher in stocks as a reaction to the quote-unquote inline CPI numbers. But I'm not so sure that's what the real story is here. We had some great numbers by four of the largest U.S. banks this morning: Citibank, Goldman, JP Morgan, and Wells Fargo all reported healthy reports. Good stuff. Stocks liked it before they got that CPI number. But I think pundits were worried about a CPI number coming in hot. And so they kind of held back on their buy into the market, because if that number did come in hot, we would have seen stocks really take a dive. So the rally, I think, has been because it was more of a relief rally that we didn't get a too hot CPI number. And I think that's really where we stand right now. So with CPI coming in as it was expected and core coming in a tenth better off, we are off to the races. The 10-year yield sank below that 4.7 level, which added more fuel to that equity rally. Now, my next guest watches this stuff like a hawk. Please welcome into the show, Mr. Eddie Ghabour. Eddie, thanks for being on. He's a co-founder of Key Advisors Group. Thanks for being on. All right. Everybody, you know, at first I was angry because I thought, how can you rally on an inline CPI number, right? And I thought that was stupid. But then the more I thought about it, maybe they would have rallied a lot more on the bank earnings if we didn't have the CPI, because I think folks were worried about a hotter than expected CPI, and that kind of held them back from buying the market. Once we got an inline number, even though it's hotter than it was last month, I mean, we're still positive. Prices are still rising. I think that's going to be a problem for Trump. You know, I want him to not have a problem, but I think that's going to be a problem. Anyway, I think that's why we rallied. It was kind of a relief that we didn't get a real hot CPI. What do you think?
I agree 100% with you, because short term, there's a lot of areas that are still in downward bearish trends that kind of started in mid-December. And you're right. I think 2025 is going to be the tale of two stories, because the Trump administration, unfortunately, they're inheriting a dumpster fire when it comes to inflation and Fed policy. So we came into this year pretty bullish. We thought the first quarter would be strong just because of the exuberance of lower taxes and regulation and pro-business policy. But at the end of the day, we've told our clients that we expect a sizable drop in the S&P sometime materializing in the second quarter of this year, because I think by then the reality will be that we have to have some pain before we have gain. If we're going to reduce government spending, which the Trump administration is saying they're going to do, and we're going to tame inflation, there are negative repercussions that we have to deal with in order for that. And it's necessary for us to have prosperity. So I'm very bullish over the next few years. However, short term, I think we're going to hit this big air pocket that if investors aren't prepared for, they can lose a lot of money. Because at the end of the day, the inflation numbers today weren't good. What it's telling us is it's 50% higher than where the Fed says they want it to be, and it's still getting hotter, and it's going to get worse in the next 6 months.
Because, you know, if you look at a lot of the policies he's talking about, yeah, they're going to be inflationary in the short term, but in the long term, that'll be better for us down the road. But there's going to be some short-term pain. I totally agree with you, and I think that everybody's got some rose-colored glasses on here. They're a little euphoric about what actually can get done in the first, say, 6 months versus what really can happen. And I think we're going to see inflation a lot hotter than people think. I really don't think that that's going to go away. And by the way, no one's talking about oil at $80 a barrel. I mean, look at the CPI today. A large part of that reason it was higher was because of energy. So if that gets up to 85, 90, I'm not saying it will, but there could be some problems there anyway. And he's supposed to bring oil down. You know, I'm like you. I think I'm cautious. I think that I want to have some money ready when it does. We do see that downdraft. I'm not fully invested, but it'll be interesting to see if he can grow his way out of this. Because if you have good organic growth, that covers up a lot of mistakes. That's going to cover up a lot of what happened over the last 4 years. But how quickly do we get that good organic growth?
I think it's going to take some time, especially, I mean, let's face it, one of the reasons why the economy had a longer cycle than normal is the amount of government spending that got pumped into the system.
Yep.
So if you're going to take some of that out, which is what we want deficits lower, we want spending on the government side lower, that's going to be negative initially. And this reminds me, exactly the time period when Reagan won in his first term, when he inherited high inflation during the Carter administration. It was very tough for the first 12 to 16 months because they had to fix the damage that was done. And then, we know what happened in the 80s. And I think the setup is exactly the same. But I don't see how we avoid a decent sized drop if they follow through with policy and if we are right on inflation, which I really think we are.
I genuinely agree with a lot of what you have to say. I follow you a lot. And your point about government spending in a recession, I take a lot of guff in social media because I say on this show a lot. Last year I was waiting for that recession to hit. But every month when you see how much money the government was spending, I learned a big lesson last year is you can actually spend your way out of a recession or make it look like you're not in one because of how much money was hitting the streets. That M2 number was huge. And so I would say that we had a recession last year. You just didn't know it because of the government spending. They bought a positive GDP quarter after quarter.
That's right. All you had to do is look at manufacturing, right? Manufacturing was in a recession. There were other areas, look at small businesses, but they pumped so much money into the system, it masked it. Now, there's a huge price to pay for that.
Yes.
And I would argue that if this new administration doesn't scale back, the 10-year bond is going to ultimately call everyone's bluff, and we're going to blow through 5% and go to 6%. So the pain's going to be a lot worse if they continue to kick the can down the road. So I am hopeful that they rip the Band-Aid off, make some big cuts right now in the first year of his administration, and then it should be smooth sailing and sky's the limit with this AI boom that we're going to live through. But again, they've got some tough decisions, and I hope they make those tough decisions, even though they will be frowned upon at first.
I agree. I think they will. And to your point, it is going to be bumpy. And I'm trying to tell everybody that I can exactly what you're saying. It can get done, but it's not going to get done like you think it's going to get done in the time frame that you think it's going to get done. So he's going to have good organic growth, but it's not going to happen as quickly as some of these policies he's going to have to put in place that are going to be inflationary, are going to make things a little bit uncomfortable, right? So there's no gain without any pain. You got 10 seconds.
That's exactly right. Look, let's take a step back and get our fiscal lines in order so we can take several steps forward here in this country. And I think that's what we're going to be looking forward to.
I've already heard a few people in his new administration saying, well, it's going to be harder than we thought maybe to get prices to come down. So hopefully they massage that a little bit and to help everybody kind of get used to the idea of higher prices and higher rates for a little longer than we thought we were going to get. But it will ultimately be good in the long run. I totally agree with you. Eddie, always great to see you. Thank you very much for coming on. Happy New Year. Eddie Ghabour, co-founder of the Key Advisors Group.